Hello everyone and welcome to another episode of Ask Mortgage Mike. Today we're recording episode 18. It's been that long already. So first thing I want to talk to you today is about down payment assistance programs. Now these are going to vary by state, they're going to vary by county even sometimes. But we're going to talk specifically about what they're there for and how you can utilize them to maximize your purchasing ability when buying a new home. So down payment assistance programs are generally funded by the state, and they're for first-time home buyers looking to purchase a home as a primary residence. So that's going to be rule one. You got to be purchasing for a primary residence. Not all of them require you to be a first-time home buyer, and a first-time home buyer is decided by a period of 3 years. Earlier, you could not have owned a home. Again, not all of them require you to be a first-time home buyer. But so we're going to talk specifically about the North Carolina down payment assistance program through the North Carolina Housing Authority. And what they allow you to do is borrow up to 5% of the purchase price of the home and use it as a down payment. Now, the perks of it is, one, you're not utilizing it as a down payment, and you only have to pay the money back if you sell or refinance the home. And at 10 years, you start earning some of that money. So if you stay in the home for 15 years, you don't have to pay any of the money back. But at year 10, you start earning 20% of the money back. So if you borrow $10,000 at year 11, you'd only owe them back. You'd owe them back $2,000 less than what you had borrowed. So again, great options out there for you. And if you did sell before, then when you did sell, you'd have to pay it back, the money that was borrowed. So some of the rules of being eligible. First off, the one that I'm talking about, you have to be a resident of North Carolina. Obviously, it's a North Carolina down payment assistance program, so you got to be you have to be a resident of the state of North Carolina. It has to be occupying as your primary residence within 60 days of closing. So you can buy and you can sell another home and then move in, that's okay, but within 60 days, the home that you're using the down payment assistance has to be your primary residence. Your annual income, a lot of them will have income limits. So the annual income has to be limited to $87,500, and you must have a 640 or higher credit score. So $87,500 for income, 640 for credit score. You have to be applying for a conventional or government loan. So USDA, FHA, VA, or a regular conventional loan product. Those programs those loan programs are eligible for the down payment assistance. And you have to be a legal resident of the United States in order to apply for this also, because you're going to have to prove the ID or show your ID at time of application with the state for the money. But again, it's a great alternative for those that don't think that they have the money down in order to buy a house. You don't have to have the money down. This affords you the ability to buy a house with no money down, and to actually have a great loan program, a great loan option for you. So again, this was episode 18 of Ask Mortgage Mike, where we take a look at some down payment assistance guidelines. You'll want to look for your state-specific ones that are out there. But I hope everyone was able to learn something today, and I look forward to seeing you on episode 19. Have a great day.